Looking at your bank account this morning and wondering if that Social Security deposit hit yet? Well, let me tell you something that's going to matter to your financial future right now. We're sitting here in January 2026, and there's been a fundamental shift in how these payments are rolling out. And folks, most people have no clue what's actually changed. The Social Security Administration just implemented new payment schedules that affect over 67 million Americans. And if you were born between the 1st and 10th of any month, your money is landing in your account today. But here's what nobody's talking about. The cost of living adjustment that kicked in this year is the smallest we've seen in 4 years, sitting at just 2.5%. That means the average retiree is looking at about $48 more per month. And before you celebrate that increase, you need to understand how Medicare Part B premiums are eating into that raise. The government giveth and the government taketh away. I'm going to walk you through exactly what's happening with your money, when to expect it, and the 3 critical things you need to verify in your account right now to make sure you're not leaving money on the table. Now let me break down what's actually happening with your Social Security payment today, because I've been getting calls from people all across this country who are confused, frustrated, and honestly a little bit scared about whether their money is going to show up when they need it. And I get it. When you've worked your entire life, paid into this system for 40 or 50 years, you deserve to know exactly when that money is hitting your account and why things might look different than they did last month or last year. The Social Security Administration has always operated on a schedule, and that schedule is based on your birth date. It's not random, it's not arbitrary, and it's definitely not designed to confuse you, even though it absolutely does confuse people. If you were born between the 1st and the 10th of any month, your payment arrives on the 2nd Wednesday of every month. That's today for January 2026. If you were born between the 11th and the 20th, you're looking at the 3rd Wednesday. And if your birthday falls between the 21st and the 31st, your payment comes on the 4th Wednesday. Now, there's an exception to this rule, and it's an important one. If you started receiving Social Security benefits before May 1997, or if you're receiving both Social Security and supplemental security income, your payment comes on the 3rd of every month, regardless of your birth date. And when the 3rd falls on a weekend or federal holiday, they bump it up to the last business day before that. Here's what I want you to understand about this system. It was designed decades ago to spread out the workload at the Social Security Administration and at banks across the country. Back when millions of people were receiving paper checks, it made sense to stagger these payments so the entire system didn't get overwhelmed on one single day. But we're in 2026 now, and the vast majority of you are getting direct deposit. Your money moves electronically from the federal government straight into your checking account, and it happens faster than it ever did with paper checks. That's a good thing. That's progress. But it also means that when something goes wrong, when there's a delay or an issue with your account, you find out about it immediately instead of waiting for a check to arrive in the mail. Now let's talk about this cost of living adjustment, because this is where people are getting really worked up, and frankly, they should be paying attention. The COLA for 2026 is 2.5%. That sounds like a nice little bump until you actually do the math on what that means for your monthly check. The average Social Security retirement benefit in 2025 was about $1,176 per month. With this 2.5% increase, that average is now going up to about $24 more per month. No, wait, I said it wrong in the hook. Let me correct myself here because accuracy matters with your money. We're looking at roughly $48 more per month for that average beneficiary. But here's the brutal truth that the government doesn't put in big, bold letters when they announce these adjustments. Medicare Part B premiums are going up too. The standard Part B premium for 2026 is $185 per month, and that's automatically deducted from your Social Security payment if you're enrolled in Medicare. Last year, it was $174.70. So you're looking at an increase of about $10.30 just for Medicare Part B. Suddenly, that $48 raise doesn't look quite so impressive anymore, does it? And that's before we even talk about Part D prescription drug coverage, which varies depending on your plan, but has also gone up for most people. Some of you are looking at your Social Security statement and wondering why your net payment barely moved even though you got this so-called cost of living adjustment. This is why the government gives you more money with one hand and takes a chunk of it back with the other, and they're counting on you not doing the math or not understanding how these systems interact with each other. I'm here to tell you that you need to do the math. You need to look at your actual net deposit, not just the gross benefit amount that Social Security tells you you're entitled to. Let me tell you about something else that's changed this year that most people aren't talking about. The earnings limit for people who are receiving Social Security but haven't yet reached full retirement age. If you're still working and you're collecting Social Security early, meaning you claimed benefits before your full retirement age, which is 67 for most of you watching this, there's a limit to how much you can earn before Social Security starts withholding some of your benefits. For 2026, that limit is $23,640 per year. That means if you earn more than that amount, Social Security is going to withhold $1 in benefits for every $2 you earn above that limit. Now, if you're reaching full retirement age this year, the limit is higher, $62,260 for the months before you hit that full retirement age, and they only withhold $1 for every $3 over the limit. But here's what kills me. People don't know about these limits, or they forget about them, and then they're shocked and angry when Social Security claws back thousands of dollars from their benefits because they made too much money at their part-time job. You need to understand that these aren't penalties. Exactly. Social Security will eventually adjust your benefits upward once you reach full retirement age to account for the months when they withheld payments. But in the meantime, you're dealing with less money in your account right now when you need it. And let's be honest, most people who are working in their 60s aren't doing it because they want to stay busy or because they love their job so much they can't bear to retire. They're working because they need the money, they didn't save enough, or they claimed Social Security too early, or they've got medical bills, or they're helping their kids or grandkids financially, and now they're stuck in this situation where earning more money actually costs them benefits. It's a trap, and it's one that too many people fall into without understanding the consequences. Now let's get practical for a minute because I want you to actually check something today. I want you to go online. And yes, I know some of you don't like computers and you don't trust the internet, but you've got to get over that because this is 2026 and this is how the world works. Now, I want you to go to ssa.gov and create a My Social Security account if you don't already have one. This is where you can see your payment history, your benefit amount, your earnings record, all of it. And you need to check that earnings record because errors happen more often than you think. The Social Security Administration is a massive bureaucracy dealing with hundreds of millions of records, and sometimes employers don't report your earnings correctly, or they report them under the wrong Social Security number, or the data just gets entered wrong. If there are errors in your earnings record, it could mean you're getting less in benefits than you're actually entitled to. I've seen cases where people discovered they were missing entire years of earnings from their record. And once they got it corrected, their monthly benefit went up by hundreds of dollars. That's real money. That's money you earned and paid taxes on, and you deserve to get credit for it. Here's another thing you need to verify. If you're married or if you're divorced from someone you were married to for at least 10 years, you might be eligible for spousal benefits or divorce spousal benefits that are higher than what you're currently receiving on your own record. A lot of people don't know this, and Social Security doesn't exactly advertise it because it costs them money to pay out these benefits. But if your spouse earned significantly more than you did during their working years, you might be entitled to up to 50% of their full retirement benefit instead of taking your own smaller benefit. And if your ex-spouse earned more, same deal. You can claim on their record without affecting their benefits at all. They don't even have to know about it. But you have to know about it, and you have to apply for it. Social Security is not going to automatically give you the higher benefit just because you're entitled to it. You have to ask for it. The same goes for survivor benefits. If your spouse passed away and they were receiving Social Security, you're entitled to survivor benefits that could be as much as 100% of what they were receiving. But again, you have to claim it, you have to know your rights, and you have to advocate for yourself because nobody else is going to do it for you. The Social Security Administration is not your financial advisor. They're a government agency processing millions of claims, and their job is to pay out benefits according to the rules, not to make sure you're getting every single dollar you're entitled to. That's your job. Now, I want to talk about something that's causing a lot of anxiety out there, and that's the long-term solvency of the Social Security system itself. You've probably heard that the Social Security trust funds are projected to be depleted by 2034 or 2035, and that if nothing changes, benefits could be cut by about 23% across the board. That's scary, especially if you're depending on Social Security for most or all of your retirement income. But let me give you some perspective here. Social Security is not going bankrupt. It's not going away. Even if the trust funds are completely depleted, Social Security will still be able to pay out about 77% of scheduled benefits from incoming payroll taxes. That's not great, and it's definitely not something we should be comfortable with, but it's also not the end of the world apocalypse scenario that some people are painting. The reality is that Congress is going to have to do something eventually. They're going to have to raise the payroll tax cap or increase the retirement age or adjust the benefit formula or some combination of all of those things. And yes, it's frustrating that they've known about this problem for decades and they still haven't fixed it. But that's politics for you. What you need to focus on is what you can control. And what you can control is your own financial situation. If you're relying entirely on Social Security for your retirement income, you're in a vulnerable position, regardless of what happens with the trust funds. The average Social Security benefit replaces only about 40% of pre-retirement income for the average worker, and that's assuming you worked consistently and earned decent wages your whole career. If you didn't, it's less. This is why I've been screaming from the rooftops for years that you cannot rely on Social Security alone. You need savings, you need investments, you need a plan for retirement that includes multiple income streams, not just a government check that might or might not be enough to cover your basic expenses. And if you're already retired and you're realizing that Social Security isn't cutting it, then you need to look at your options. Can you work part-time? Can you downsize your home and reduce your expenses? Can you move to a lower cost of living area? These aren't fun conversations to have, but they're necessary conversations if you want to maintain your financial independence and dignity in retirement. Let me also address something that comes up all the time, the question of when to claim Social Security benefits. A lot of people claim at 62, the earliest possible age, because they want the money now, or because they're worried the system is going to collapse, or because they just don't understand the math. But claiming early permanently reduces your benefit by up to 30% compared to waiting until your full retirement age. And if you wait until 70, your benefit increases by 8% per year beyond your full retirement age. That's a guaranteed 8% return on waiting, which is better than almost anything you're going to find in the stock market with zero risk. Now, I'm not saying everyone should wait until 70. If you're in poor health, or if you desperately need the money, or if you've got a family history that suggests you're not going to live a long time, then claiming early might make sense. But for most people, waiting at least until full retirement age is going to result in a lot more money over the course of your retirement. The bottom line is this: your Social Security payment is hitting your account today. If you were born in the first 10 days of the month and you need to verify that it's there, that it's the correct amount, and that you're getting every benefit you're entitled to, this is your money. You earned it. You paid into this system your entire working life, and you deserve to get what's rightfully yours, but you've got to stay informed. You've got to check your statements, and you've got to advocate for yourself because nobody else is going to do it. The system is complicated on purpose, and the people who take the time to understand it are the ones who end up getting the most out of it. So get on that computer, log into your My Social Security account, and make sure everything is in order. Your future self will thank you for it.